All right, good morning, everybody. How's everyone doing today? All right, good morning. I meant to start this a few minutes earlier, just having a few technical difficulties this morning, but we should be good to go. I see some of you starting to come in. Good morning, Miles. Good morning, Karam. Hope everyone's having a nice morning. I'm going to kind of recap what has happened so far this morning. We'll start with Pound Aussie. Had a first trade this morning. Morning started right around 8:30. There was a setup that canceled and a short setup that fairly small trade found support, came up and stopped out. And then another trade here that got short at 79.28, the current trade. And trying to get to its money management level. So that's targeting 79.10, 7900, 78.90, and then down at target 4, 78.80. The stop at 79.52. So it's got to push through that 50 moving average, at least to get to risk-free. Maybe it's topping out in here, not a ton of energy getting to follow this first move up. I think we should look a little further back. Yeah, so the market's been trending up actually for a while now. This is going back to yesterday evening. Looks like it's trying to top out up in here, but it hasn't decided yet. So let's see if it does. Anyway, that's the trade. And then crude oil. Our 9 a.m. mini session. It's a long trade, too soon. But then you had the short trade here, about 13 minutes into the start time at 9 a.m. That one's at 9:13. And that one came down, hit its primary objective, target 1, with the 8-tick momentum bar. That was good for 15 ticks, $150 a contract. And then it just missed target 2 by 1 tick. And when you miss a target by 1 tick, you have to make a decision on how you're going to handle that. There's all different kinds of ways to do it. It's a personal preference. One way is to count to 3 and then mark it out. Another way is just to hang on and see if it pushes through. You've got your trailing stop already in place, which would have been actually, I don't know if you would have been able to move it fast enough from the prior bar to 82, but it would have been at 83. Another idea is to move your stop down to the prior target. So there's three or four different ways you can handle when you just barely miss a target. That's a pretty accurate trade when you have a calculated target based on the specific trade setup and it comes down and misses by only 1 tick. Good morning, Giancarlo. Good morning, Brett. Thanks for joining me today, you guys. Appreciate it. Just a quick reminder, I think I'm becoming a YouTuber, so if you don't mind hitting the like button, I'm going to have to get my bongos out. Get back to busking. Begging for shekels. All right, let's take a look at the unleaded gas contract. Again, 9 a.m. start time, so the long trade had already triggered in. And now the short trade, and that one did get short. This one you kind of have a choice to go to target 1 as a primary objective. Target 2 is the original trade plan objective. This time it did get to target 1. Didn't get close enough to target 2. Target 1, 34 ticks, and stopping out. Your best risk-reward ratios, of course, come from target 2 and below, but you get higher win rates, obviously, at the closer target, so you can make an argument to scale out if you're doing multiple positions. You just have to decide. This is a trade plan decision you have to make. Then there's the pullback to the blue line, and that's a smaller trade, but you can see a well-calculated perfect target 4. And the question is, I don't know, did you have time to grab it? Maybe. You'd have to kind of be there to see. Looks like it was doable. 2 winners, depending on what your target objective is, and that trade plan should be finished. And that brings us to the YM. The E-minis, last few sessions, a little trickier than usual, but you did have this nice setup right at the open, and it was just right as I was getting live here, this long trade. And I don't know why I'm getting all these spinning wheels all the time. This is kind of annoying. I've had to restart my computer more than once this morning. That's why I was late getting on. Not sure what the issue is. So I got this spinning wheel, and I'm just waiting now. But you could see the blue trade to go long here on the YM, and the YM actually finishes quick, one and done. So here's the trade. It was almost a minute into the session, and you had several bars to place the order. And then it comes up and hits that perfect target 4. That's right where it's found resistance, as you can see. Target 1 is your primary objective with the 14-tick momentum bar. That was good for 33 points. That's $165 a contract. And then all the other targets if you're trading multiple positions, and you can just see one and done. And this is why you don't keep trading. You have a trade plan, you try to hit your goals, backpack trader style, take your money and run. Because then you get the choppy consolidation as it gets toppy, right? Kind of tops out in here, and you get the up down, and this is always problematic for traders. That's why the power of quitting, you get that money and go, and then just come back tomorrow and do it again. That's the whole point. I also want to point out, notice that when, there's a different point here, but when it breaks out above the high of this swing level, you can see it just barely pokes up above, and then no follow through. So it breaks resistance barely, just kind of picks up the last buyers out there at the moment, and then the failure to get higher leads to a strong move lower, and the short trade to follow, of course, a perfect target and successful. So a suggestion that I've made to a lot of people, and I'll repeat it here because some of you are still trying to figure out what to trade and when, is to learn to focus on the fake. I don't want to say fake because that's just a description that maybe isn't so accurate, but the point I'm making is you look for the breakout of support or resistance, and in this case breaking out of the swing high for a potential second leg or another leg higher, an action move, a subsequent action move that might mirror that first action move, right? So you have your action move, your reaction into the blue line. If this market's going to rally, you can get a nice leg higher, and that's typically not a bad trade. But what you could do is wait for those action moves, subsequent action moves, to break the resistance, no follow through, and fail. Maybe a failed move is a better description than a fake breakout. Kind of is both. But anyway, then you wait for the reversing trade, and that's the one you focus on and pounce on. And you could build trade plans with that idea, because that idea doesn't require a start time or a stop time. It's more of a random trade of opportunity. But we do know that quite often the inability to follow through on a breakout through major support or resistance can lead to a strong move in the opposite direction, and those trades have high odds, and you can learn to specialize on those setups, and then that becomes what you work on and get really good at. And you'll see that you're going to get good results. Sure, not all trades will win. Sure, you'll have a losing trade from time to time, but a losing trade is not a bad trade. If you have the odds stacked on your side, it's a good trade. That doesn't mean you're going to win every time. It just means you have the odds on your side. And that's a good trade when you could prove you have the odds on your side. Fair enough, everyone? So, problems in paradise here with the pound Aussie. It's not done testing these highs, and now we have a stop and reverse, which would be at 41. 41, we're going to put a 2-pip adjustment and then adjust it around the key level. And that's a tough place to get long if this is topping out. And hopefully it'll stay short. But it could go long and keep rallying too. We really don't know. So we just have to follow our setups. That's all we can do. Just because there's a setup to go long doesn't mean we are going to go long. And anyone who was waiting to get filled on this trade, because I know that, for example, with the Trade Today service, it got called and it was below the market. It hadn't come up yet. So now it has come up. It hit the entry. I know I just got short, and I may have to jump off the mic for a second and put in the reversing order. In fact, I think I'm going to do that. All right, so I also heard news that there's a small update for the rapid fire entry tool, which we're going to upload onto our site later today. And there's a bug that we found, and basically the way that the bug is that if you have a trade that's really close to the market, FX Synergy will put in a market order. because a lot of times your trade will just get canceled, and then you'll have to re-enter it, and you'll have to finesse it, and you might miss the move. And so there's a setting inside of Synergy where you could tell it that if you're within a certain amount of distance from the entry, let's say 1 pip, and you're too close to get filled by the broker, Synergy will automatically assess that situation and send the order in as a market order, and then you get filled. But the risk parameter wasn't working. It wasn't putting on the proper position size. It was just putting on one mini, 1 micro, whatever you've got it set to. So now with the new default, with the new update, it will default to your preset. And so if it puts in a market order, it'll put in the proper position size. So I have to upload that. But just a heads up for everybody, that's going to be on the site a little bit later today. You'll want to update your FX Synergy platform, and it'll be automatically in there. And that's really easy. It's just a matter of downloading the file and copying it into the FX Synergy folder and replacing the other one that's in there. So if you have any questions about that, just let me know. Michael says, Troy, do you look back at different time frames, hour, day, week, to see if levels are being reached, etc., historical pivot points, I guess? Sometimes I do, Michael. It depends. It just depends on what I'm trying to accomplish. Don, yeah, I just mentioned that to Kevin. I agree with you. That was a mistake. In the heat of battle, when you're trying to do things fast, it's easy to, it's easy to forget little nuances. He's getting it, but I agree. I mean, in this case, it probably worked out better for you guys because you got in 2 pips sooner. But the entry should have been at 41, not at 39. That's what you're referring to, right, Don? So the pound Aussie has kind of been a little bit of a slump. Admittedly, it just has not been producing trades. We've been a little bit out of sync and on the wrong side of the swing, so to speak, just the way the spotlight has been producing trades. And that could happen sometimes. I don't know if anyone's a musician in here or knows what a phase shifter is, but it's kind of like if you think of a sine wave and then another sine wave that lays on top of it, and the one on top of it moves over a little bit to the right. That happens with trade plans and strategies sometimes, and you have to wait for it to kind of come back into focus and back into sync. It's just a metaphor, but it's how I kind of describe what happens when a trade plan isn't producing. A lot of times it just gets out of phase, out of sync, and if you do too much to it, you ruin it. You just kind of have to sometimes leave it alone and give it a chance just to get back into sync, into phase. So I'm a musician, and it's a metaphor I understand. Not sure if you guys do, but try to explain it in a way you can understand it. That's how I view what's happened with the pound Aussie these past several sessions. And when we look at historical trade plan results and equity curves and what have you, depending on how much of a sample you're looking at, you often see the beginning and the end, and oh wow, it would have gone from here to there, and sure would have been great to grow my account that much. But when you take the microscope, or at least you zoom in and drill down into each session and sections of that curve, you notice that there are periods of time where it goes flat and where it goes down, and it takes some drawdown. And when you're in it, it's always hard. It's like being in the trees without the concept of knowing or feeling the forest itself. Just trying to dodge those trees and avoid those losses, and I mean that's human nature and it's normal. But that's what causes people to quit, and they usually quit right before the new growth occurs. So just want to encourage you guys. I haven't lost faith in the plan. It's been working for many years. It's just that right now it's a little bit in the doldrums. Don, are you referring to the stop loss, or are you referring to the stop and reverse? I wasn't sure what you mentioned with your comment there. Maybe you could elaborate on what you meant. Good morning to you, Alan. The stop should be 79.12. Okay, so maybe that was a typo that you were referring to. All right, and I'm receiving a message also from John that unfortunately he will not be able to do tomorrow's session. So by next week we should be back on schedule. So it looks like tomorrow we won't have a session. So, you know, look, see this up, these kind of V-shape reversals as the market seems to be topping out in here. Very tough on traders. These are the kind of trades that just are going to lose every time because you don't have enough energy to get to any targets, and then it turns around and heads the other way, and it looks like it's putting in a head and shoulders possibly in here, at least short term. And trying to get into a trade when a market's topping out is it's going to give you losses. Though now the short trade probably has a good chance of succeeding. So today is the crude oil report. We'll be doing that in about, well, start setting up for it in about 31 minutes. We're going to log out and then log back into a new session. So I've decided I'm just going to keep the crude oil report sessions separate and by themselves. And that's mostly for someone's viewing convenience so that they can just log into the channel and see the session, the crude oil report, and not have to get through the typical trade room session like this to get to the crude oil report. So we're just going to have to get in the habit of logging out or ending the stream and starting the new one. So that'll end up being a routine. I don't think it's a big deal, but that's what we're going to end up doing. That is what we're doing. So just a heads up and a reminder to everybody. And as more and more people show up this morning, I just want to say welcome and thank you for arriving. And if you don't mind, please hit the like button. I hate to sound like a broken record, but it really helps us. And any questions anybody has, if you missed the earlier part of the session, we already hit our trading goals with the Dowie Mini. The Dowie Mini, I'll just review it really quick because I know a lot more people have arrived here, but right at 8:31, I believe it was, you see there's a lot of action today. A lot of trading going on this morning to start the session. But this was the first trade of the day right here. The pink trade prior was too soon. It was already in the, heading to the target, and then it was our start time. So the second trade was the blue trade, and you could see that you had plenty of chances to get into it, and it zoomed up, hitting a perfect target, and topping out, looking similar to the pound Aussie, except that the way the trades landed on the chart just were better. That's what I mean by that phase shifter analogy. This one's in phase, it's in sync with the market. Sometimes it'll get a little bit out of sync, as we're seeing with the pound Aussie, unfortunately. So the first trade, anyway, 33 ticks to target 1, $165, target 2, $255, etc., and the trailer, and a nice trade, whether you're trading one position or more than one position. And then topping out, and then I explained how it broke out a little bit above, couldn't find any more buyers, and failed to follow through, which set up a nice move in the opposite direction, which hit a perfect target 1 in any case, and then consolidation. Because in the bigger picture, this market wants to go up, not down. So power of quitting kept us out of this mess. And that's another thing to always remember, is that markets trend and markets consolidate. That's just normal price action behavior. That's why the power of quitting, we call it power of quitting. You hit your goals and it empowers you to stop trading, because usually if you get that one and done, that first trade out the gate, you get that target, you hit that profit, you take that money, you don't have to then worry about whether the markets are going to now consolidate or what. You can just get out of the way and then come back tomorrow and do the same thing. So the way power of quitting works, if you really think about it, is it's kind of adjusting to market conditions, taking what the market wants to give you, not necessarily what you want from the market, because really no one cares about that. I mean, I care, but it doesn't matter if I care because it's the market that matters. The market doesn't care. So the beautiful thing about the power of quitting is that you have a rule and a goal-setting strategy that's dynamic and adjusts to the market condition of the time. And if you could hit your target and take your money and run, it's empowered you to quit trading. And now you could always trade more. You just got to repeat that with another trade plan. Each trade plan has its own cadence, its own rhythm, its own edge, its own advantages. Same thing with crude oil. I mean, you can see crude oil's gotten pretty messy. You had some nice trades. The first trade of the morning right here, hitting its target 1. That's the objective on this plan, and then missing target 2 by 1 tick. But either way, that's it, one and done. So do you want to be in there and deal with the next, well, the consolidation? 3 losses in a row. Probably not. I'll be back in just a moment. I'll be back in just. All right, guys, sorry about the delay there. All right, so I thought it might be an interesting idea to take a look at a chart that we used to trade in here all the time, and then things kind of dried up, and well, we stopped trading it. And I'm going to take a look at it again because it's kind of come back to life, I've noticed, and it was a great trading chart for quite a while. And so I had this idea that I think what I'm going to do is go through the motions that I typically want you guys to do, starting with the 3-step sniff test, spending time fast testing it, and ultimately building a log of trades in the UTA spreadsheet so you can iron out your trade plan and prove to yourself that the trade plan will make you money. I mean, I think that's critical and essential for all trading if you ever hope to really succeed. You have to kind of do that work. A lot of you don't know how to do it, or get lost, or are intimidated with the idea of even starting, and that's totally understandable. I went through that myself. I mean, for the longest time, I resisted and resisted. But once I started doing that work, things changed for me. And so I thought it would be really cool to kind of do a YouTube live and pull up this chart and actually start this process where you guys, whoever's interested, I mean, some of you just might be like bored to tears, and I totally get it, but if you're interested, you can look over my shoulder and kind of see how I do it. So I'm going to show you what I have in mind. You guys can decide to join me on it or not. And what I'm going to do is I'm going to take this pound Aussie chart and I'm going to copy it because it will be a Forex trade plan. And the market that I'm interested in is our old friend, the EUR JPY. And I've done a little bit of the sniff testing where I've kind of looked at some charts, and it seems to me that the 6 pip momentum bar is a good starting point. This is the one that kind of answers those first 2 sniff test questions. You guys remember what those 2 questions are? What the first 2 sniff test questions are? This is pretty important because this is how you can determine if a chart and a symbol is worth your time investigating further before spending a ton of time to figure out if it's worth your time investigating it further. So the 3-step sniff test begins with looking at a chart to see during the session you want to trade. Number 1, first question is, are there enough trades? And so it's easy to scroll back on a chart and look at 10, 20 sessions and determine if there are enough trades during the session you want to trade. Okay, that's an easy test. Use your eyeballs. You can see it. It's either there or it isn't. Armando says enough trades. Yes, thank you. But you want to have some basic rules, like what's your start time? What's the window of time that you want to trade? Okay, so that's important because that's how you determine if there's enough trades. All right, so the second question, anyone want to type it in before I tell you? Kind of want to see where your heads are at. There is a good video on this channel about the 3-step sniff test, and I recommend you watch it if you haven't seen it, because this is really helpful. This is how you economize your time. This is for you to not have to waste your time. It's how you economize your time and use your time productively. Time's valuable. I value your time. Very grateful that you're even here in the first place. So the second question is, are the trades an appropriate size? In other words, are they large enough, or are they too small? Are they too large? Yeah, Armando, it's not the win percentage because, and that's a good guess, but you can't determine the win percentage yet. You learn about the win percentage much later. So the second sniff test is actually a really quick one. And for example, let's say we're doing a sniff test on this chart here, the euro yen. Yeah, and Brett says, are they large enough? Good answer. That's exactly right. Well, it's not only are they large enough, I think the more accurate question to answer is, are the trades an appropriate size on average? So you can go back and look at, again, 10 or 20 trades and kind of see what the average risk is, the average reward. And what's beautiful when you have one of my strategies, which is, I'm sure most of you do since you're in here, but is when you click on the trade, you have all the information right here in the data window. So we could see that's a 16 pip risk. We can see that trade's too small to go to target 1, but targets 2, 3, and 4, certainly appropriate. It's worth trading. So if that's the first trade, obviously, it's not enough to determine anything. So you can go back then and look at prior sessions, and you could determine rather quickly just by getting an average. You know, you could average that average risk, get that average risk, because that, if you got the risk, then you know the target, what the targets are going to be, because you got the multipliers of 1x, 1.5x, 2x, 2.5x, right? So you could pretty easily determine if the trades are an appropriate size. If they're too small, you get noisy, you know, too much up and down, too many trades, and too small of a profit. And that's not what you want. You want to find that sweet spot where the trades are enough, you have enough of them, and they're an appropriate size. Okay, the third part of the sniff test takes a little longer, and it takes some dedication, and that's what I'm going to do with you guys. It's the fast test. That is the third step of the 3-step sniff test. And what you want to determine with the fast test takes about 100 sessions. Okay? That's about the right amount, I think. You want to, or more, but the idea is you want to determine that you can quit your session with a positive result a vast majority of the time. Okay, so you basically, we do the chicken scratch counting. We go back and look at each session, and we look at our start time, and did the trade win, did the trade lose? Well, if it wins, okay, great, you just have a winning session, move on to the next. And you can quickly go through sessions. If it lost, you look at another trade, you might have to do a little math, but if you can get to that positive result, based on hitting a target, positive result, that goes in the win column. If it loses, it goes in the loss column. You have a break-even column also. So ultimately, you're going to have some sessions that break even too, so you got to count those. If your winning sessions are somewhere in the 75+% range, and then you add anywhere from 3 to 6% of those sessions might be break-evens, and of course the win sessions I've seen even more than 75. I've seen 80%. Just depends, because market's always shifting and changing, but that's why you want to look at a lot of sessions, 100 or so, or more. And then your losing sessions, they should be anywhere from 15 to 20%. If you can get it less than 20%, you've got yourself a contender, a trade plan that is worth further investigation. So you can fast test and do this 3-step sniff test on a number of different ideas. I would recommend a good amount, 10 maybe. and then let the one or two best ones present themselves to you. The cream rises. And those are the ones you then drill down further and really figure out using the UTA spreadsheet. The UTA spreadsheet obviously is time consuming, and that's why you want to do the 3-step sniff test on a number of trade plans first, so that you can economize your time. You don't want to spend a ton of time with the UTA spreadsheet on a trade plan that's going to ultimately give you valuable information that it's no good and it's something you don't want to trade. Right? I mean, that is valuable information. It's just that you don't have to spend all the time with the UTA to find that out. You can find that out with a simple fast test. You guys with me so far? So my idea is to take this trade plan here. Well, it's not even a trade plan. It's just a chart. But we're going to duplicate. Well, I'm going to test a couple things. I want to test the U.S. session. I'm going to fast test the Asian session, because that's a pretty cool session to trade for a lot of you. You get home from work, 6 p.m. New York time. It starts maybe a little before, maybe a little after. The fast test will show us. And if you're fast testing one session, it's really easy to fast test another, because the chart's right there. You're just clicking through and counting winning, losing, break-even sessions. That's it. Chicken scratch counting, right? 1, 2, 3, 4, cross. 1, 2, 3, 4, cross. And then it's really easy to add it up, get some percentages, and figure out if it's worth your time investigating further. This is super, super valuable. This is how you figure out the best way to trade for you. You could fast test my idea of waiting for a breakout that fails and then taking the trade in the opposite direction. You can fast test that. It may be hard to do if you don't have a start time and a stop time, because you might find, like back in here, it breaks. If you look at the left, it breaks resistance, fails to follow through, sets up the strong move in the opposite direction, but it's at 5 a.m. New York time. I mean, there's no way I'm going to trade that. That's 2 a.m. for me, right? So that you kind of have to have a start time for when you're going to trade. But you could, in theory, look for those scenarios during the time you want to trade and fast test that idea. Just set up some simple rules so that you do it the same way each and every time. And then you can get measurable results and prove to yourself that it's a good idea or not. And both discoveries, whether it's good or bad, are valuable to you. Because if it's a bad idea, that's valuable too. You have to learn what not to trade sometimes first. That's easier than figuring out what to trade, because most things are not worth trading. It's easy to find stuff that isn't worth trading, right? But it's still important to know what that is. You guys with me? All right, so I just wanted to kind of throw that at you guys. And so what I'm going to do is I'm going to schedule a session. And it may not even be scheduled. It might just be, oh, I have a little time. I'm going to start this session. So if you guys subscribe to the channel here and click on the alert button, you get an alert when I'm going to do this. And if you want and you're not doing anything, you can log in and join me and just watch me as I fast test this particular chart. Because what I've noticed is that the swings are nice and it often exceeds the target, and the trailer tends to do really well. And it's kind of like how it used to look in the past. Now, if you remember, I don't know, we've looked at it over this last year or two, and it's just been kind of, what happened to it? Went into hibernation. But I think it's springtime now, and it's come out of hibernation, and it's looking like it's back to its old self. So that's good news for us, hopefully. We're going to fast test it and find out. And I'm going to do that as a special YouTube live session. And you guys can join me, get some practice, see how I do it. And then hopefully that'll help you going forward when you do your own testing. The idea is you want to chase down your own you want to be able to chase down your own ideas. That's going to be the most meaningful for you. since you all live in different parts of the world, have different life situations, finding the right trade plan for you is a challenge. But once you find it, things start to change. All right, so that's going to do it for this morning. I'm going to end this session. I'm going to start up the crude oil report in a few minutes, and hopefully I get to see you guys back in here for that. If you didn't do so already, please remember to hit the like button. Don't forget, if you haven't subscribed, please do so, and make sure you click on the button where you get notifications so you know when we go live, because I am going to do some, and they may not be planned. They might just be impromptu. All right, so I'll see you guys back in here shortly. And, well, that's that. See you in a few minutes.